And there arose a great storm of wind, and the waves beat into the ship, so that it was now full. And he was in the hinder part of the ship, asleep on a pillow. And they awake him, and say unto him, Master, carest thou not that we perish? And he arose, and rebuked the wind, and said unto the sea, Peace, be still. And the wind ceased, and there was a great calm. And he said unto them, Why are ye so fearful? How is it that ye have no faith? And they feared exceedingly, and said one to another, What manner of man is this?
Good morning, good afternoon, and good evening. Welcome to MoCo Resistance. I'm your host, Harold Maldonado. Today's date is June 17th, year of our Lord 2023. Today we're going to talk about current events, and then we're going to talk about the economy. The county economic committee had a meeting this week, and we're going to show you what they presented, and also we're going to do a little deep dive into the whole situation in the economy in the county, how we got to where we are right now in a stagnant economy that is not producing quality jobs, that is not producing tax revenue, that is not producing economic activity in order for us to enjoy a thriving economy with job creation and well-being for everybody. So let's get started with the current news. We're going to talk about in the Twitter feed, we have MoCo PG News. Unfortunately, they report the death of 16-year-old Kevin Reese Campos, a student from Montgomery Blair High School, who was killed on Wednesday evening in an apartment complex in Menlo Park. We hope for the police to solve this crime, and we want all involved to face the full impact of the law. And we send prayers and thoughts to Kevin's family. God bless. Continuing, we have information from Clean Slate MoCo. Clean Slate MoCo has been very active recently, touching on different issues, and most recently touching on the unfortunate comments made by Council Member Kristen Mink last week, where we also shared in episode 1. Right here, Clean Slate is basically asking Larry O'Connor, conservative voice in the region, to do us a solid. But I hate to tell you, Clean Slate MoCo, don't hold your breath on that. Larry, although he's a conservative, he's not going to do anything but who you should have asked, because he had a chance to be active last year and share information about the elections, and he had a chance to interview all the GOP candidates in order for the region to know who they were, but he failed to do that. So I wouldn't hold my breath if I were you. Larry O'Connor will not do anything. Now we have Montgomery Chuck. He's one of the county accounts that is active, and he provides logic and common sense, and we welcome Montgomery Chuck to our list of grassroots voices from the county. And before I share his tweet, I'd like to warn everybody that if you have any kids around you that are watching or listening, please be advised that the next piece of information is for adults, because it has adult content. And it's very ironic that I say that, because the information is actually used in schools today in our county. So you've been warned. 1, 2, 3. Let's go. So Wes Moore, the Democrat governor of Maryland, has voiced support of using inappropriate books for schools. So here we have genderqueer, and this is one of the reasons the main reason why parents in the county are reacting. That's why the Muslim community, the Christian communities, are getting together and showing opposition to the Board of Education in the county to stop this this curriculum from being used in schools, and being able to opt out, to have their kids opt out of this material. As you can see in front of you, very graphic, very the text and images are very graphic. You see, characters in the book that are school age characters performing sexual acts. So it's very inappropriate, and we here at MoCo Resistance support the movement of the Muslim community, the Christian community, and all concerned parents that are against this curriculum. And let me just say that this curriculum and this agenda from the socialist, communist, Marxist Democrats is not only happening in the county, it's happening at the state level, as you saw from Westmore, and also happening at the federal level all over the country and all over the world. Canada, Central South America, Mexico, Europe, Asia as well. So we're here to present this platform for parents and concerned citizens to voice their concerns. And let's continue. We have Clean State MoCo also touching on Mrs. Mink's comments that he points out as the council is completely quiet, completely silent on this issue, on what Mink said. And basically this shows how disingenuous and how hypocritical the county council is. The statement were made by another person, a conservative voice, or another person not affiliated with them or with the Democrat Party, then the council would have come out guns blazing, asking them to be terminated from work or be canceled in social media. Then we have one of the members of the Economic Committee of the Council, Marilyn Balcombe, saying she loves her job. I'm glad you love your job, but you're not doing your job, Mrs. Balcombe. You're not doing what you said you wanted to do last year in the campaign trail. So here again, the county. This is an example of the county council deflecting on the issues and trying to brainwash residents, telling them everything's okay, everything's normal. We're here to work for you. They're not here to work for us. Westmore, who is a puppet of the Democrat Party, and he, along others who are in leadership positions and in at all levels of government, are pushing the agenda. And here is the agenda that he's pushing. He's pushing the communist, socialist, Marxist agenda, which is to divide societies, divide people in order for them to push their agenda. And what is the agenda? To divide rich and poor, divide people by race, by religion, and by social status, and by faith. So he's doing that right now. And I was thinking of playing this for you.
We're seeing textbooks being banned, not just Florida and Texas, but now in a lot of red states. And textbooks involving commonly heralded authors, many Black authors and other historians of Black history.
They are, and there's a reason why myself and these other governors have stepped up on this issue about this, really in the sense of context of what we're all hoping to achieve and hoping to accomplish. Because when people,
I just had enough of him. He's a puppet. He's controlled by the international left, extreme left, and he's actually pushing forward with the agenda. Let's continue. Here's Mink again, trying to ignore what she has caused in terms of being racist and presenting herself as truly what she is. She's an extreme left, communist, Marxist activist who was selected to be the council member, not elected. So that's it for for local news, and let's get into the meat of episode 2, which is the economy's weakening. And I'll show you some data points, some analysis, and also to let you know that I myself am a senior international economist with a master's in economic development. So sort of this is in my neck of the woods. So let's start. So the economy is stagnant and weakening. The economy continues to be stagnant, growing at less than 2% every year. The council has no idea how to address the economic issues. The committee members are unfamiliar with economic development. Job creation is still too slow. We're coming out of the pandemic, so all the jobs that are being that are being created are basically a recovery of the pandemic. No new jobs have been created. In terms of bringing in new businesses, opening up new local supply chains, etc. And the county economic model is still the same. They still foster the growth of biotech and pharmaceutical companies. And this lines up well what we said last year, that the council is in bed with big tech, big pharma, biotech, and that's why you see a lot of money going into venture, a lot of venture capital going into biotech, and we're still losing out to our neighboring counties. So let's get into that. So there's a reason why we have arrived at this stage in the economic status of the county. Our economy has been in decline since the 1990s, and the economy is under a cycle of underperformance. The underperformance is causing us to lose revenue, tax revenue. The underperformance is causing us to not create quality jobs. And for example, this underperformance cost the county around $37 million a year. And between 2007 and 2019, the county lost about $250 million. And with that money, you could build a new high school. And I know folks in Damascus would love to have their high school upgraded. And yeah, this is the money that could have gone there and could have built you a new high school. And then we have inequality. It's increasing at a faster rate. And we would all blame this to other governments, to other people, but we had the same political party controlling the county council for over 40 years. So everything that we see today is their fault. They have to own up to it, and they're not. They thrive on pushing racial and economic justice, but they're not doing that. And for this reason, the tax burden is so high for residents and businesses. We just saw last week, we did the episode on the budget, and taxes are increasing. And that's putting a lot of pressure, not only on a regular middle class residents, but it's putting more pressure on low income residents and fixed income residents. So to give you a little perspective on the differences between the economic growth in Montgomery County and the rest of the region, I picked three years to see how we were faring in 2019 before the pandemic and during the pandemic, and what is happening now after the pandemic. So as you can see, in 2019, we grew. Our economy shrank by 2%, while DC grew by 0.7%, Fairfax by 4.8%, right there. Fairfax is in the orange. Arlington by 3%, right here, and Frederick by 1.4%. So even before the pandemic, we were underperforming, and during the pandemic, everybody's economy shrank, but we shrank the farthest. So this shows again that we're not being competitive. And after the pandemic, we see that we're still struggling, and we are going to continue to struggle because the management in the county council, in terms of how to handle the economy, how to handle finances, the two most important things in managing the whole county, they're doing a bad job at it. And 6 months into their job, 7 months actually, because they started in December. 7 months into their reign, the things are not looking good. Okay, now we see. I wanted to show you what happened before, so as not to just focus on the short-term past and short-term future. Right now, you see in front of you, and for those who are listening, there's a chart from fiscal year 2007 to fiscal year 2017. And it shows the governmental activities, expenditures, and also the business type activities, expenditures. So more than 75% of the expenditures in those years were made on governmental activities, meaning growing the government in the county, making the county government fatter every year. So, for example, in 2007, the governmental activities took up, out of $3.5 billion, it took up $3.3 billion. And the remaining $200 million was for business type activities. In then 2017, basically the ratio is the same, the percentages are the same, with the only difference that the amounts are different. In 2017, the total amount of expenditures was $4.6 billion. Out of that money, around $4.2 billion was for governmental activities, and the rest, around $200 million, again, was for business type activities. So we clearly see that the mismanagement is not recent. It has been going on for a while. And who's to blame? One council is to blame. The past and current council members who are from the Democrat Party. And again, our focus here is to present the facts, to make the residents aware of what's going on, how do we get here, and also to encourage residents to be active locally, politically, because you're not going to hear this from the local media. The local media is bought and paid for by the county council and the Democrat Party, and they're not going to show this. Right here we have a table, basically following the historical trends of the county. We see average salary adjustments increases comparing Montgomery County and Fairfax County. So this is from 2010 to 2018, and basically so the yearly increase of salary adjustments is the difference is more than 50% from Fairfax County and Montgomery County. And as you recall, last week we said, and the Fairfax County government actually is efficient in managing their finances, as opposed to the inefficiency that is rampant in Montgomery County. So, for example, 2010, there was no increase in Fairfax County in terms of salary increases, but Montgomery County had a healthy 3.5% increase. And the next few years, 2011, 12, 13, they had nothing. And starting in 2014, it went up 6.18%, in contrast to the 0.18% from Fairfax County. And in 2018, the rate went to increase by 5.5% from 1.65% from in Fairfax County. So the average between 2014 and 18 was the same. So we see that the county council increased the government size and made sure that it paid the support of the public sector in the county in order for them to receive political support. There's no other way to put it. Now we see the same information, but looking at budget shortfalls. There has been budget shortfalls since at least 2008 of around $200 million. It has gone up to $975 million in 2011 and went down to 178. So from 2013 to 2017, the average was around 190 for those years in terms of budget shortfalls. The county not being competitive in terms of attracting businesses, having a very complex permit structure and expensive too, and high taxes have made it very difficult for us as a county to be competitive against the region. And here we see inequality. This is from the U.S. Census Bureau. They, in the past, have always said, equality, we're here for the minority, for the black or the brown, the yellow, the minorities. But inequality has increased since at least 2011 exponentially, from a ratio of 13% to around 15.3%, from 15.3% in 2021. So the gap is, the rich are getting richer, the poor are getting poorer, and the county is not doing anything to resolve that. And this aligns perfectly with what we said last year. We said the goal, one of the goals of this extreme left agenda is to have two social classes, the very rich and the very poor. And they don't want anybody in the middle, because the middle class fights back. They're usually very intellectual group of people who are hard workers, and they fight back. And they don't want that. They want the rich and as them as the heads of the government, so they can dictate whatever they want. And that's what they're doing. That's why we've said we're under an occupation and we're fighting back. So thank you for joining us in this second episode. We will go over the presentation of the Montgomery County Economic Development Corporation. And here we go. They presented their findings for fourth quarter 2022 and the first quarter of this year.
We have recovered quite a bit of labor force and employment, but we still are behind from where we were prior to the pandemic. So we still have about 18,000, almost 18,000 employees or potential employees to go to hit that labor force mark. And just that it was a bit too late to get into this presentation, but the Fuller Center out of George Mason just recently released one of their kind of regular monitoring reports, and did note that especially in labor force, the suburban Maryland counties, basically Montgomery County and Prince George's, are actually about 1% below where they were in May 2020. So kind of like that first part of the quarantine, and that's in comparison to the Northern Virginia jurisdictions, which have really, regained a lot of that labor force back. They're at 8.3% above where they were. Washington, D.C. is about 3% above. So for whatever, probably a combination of reasons, the suburban Maryland counties just have not regained that labor force that other places have, even though we still have gained a lot. So, and with all that, our employment is down a percent.
One of the reasons we haven't quite rebounded in terms of the size of the employment population is that we have a number of people here who have retired. We have an older population here, and we believe that more here than elsewhere, people took advantage of the opportunities over the last couple of years to retire or to do less. So
It's very shocking to know that the entity that has to deal with economic development doesn't know how the gem numbers are not growing as the rest of the region. And very simple, the environment in the county is not apt for a recovery to foster employment creation, even in a recovery.
This is the venture capital investment portion, which was $208 million in the fourth quarter. That's about half of 2021, which was there was a lot of money floating around then with no interest. The 2020 figure is a bit of an anomaly. Most of it went to a company called X Energy, which they say is a clean energy generation company that does what they call a small modular nuclear reactor and fuel technology. But otherwise, 2020 would have been about the same as now. So much of it went to that one company. The largest first quarter investment this year went to, it should say, Axle Informatics. The indicators, that's on me. That was a biosciences company, and it's a company that looks to help medical research centers and healthcare organizations through analytics, or what they call informatics. And next. And therefore, because Axle is a biotech company, and there was one other smaller investment in another, but biotech, as it often is, biotech drug discovery, it was the also the leading sector in the first quarter for the county.
For single family, the top row, that's a pretty good indicator. You can see it kind of go up during the flight to larger homes during the pandemic, and then has kind of leveled off again. The multifamily and commercial, it can be a little. This indicator can be spotty. It goes up and down. Sometimes it's hard to unpack what's just kind of randomness and what's the whether developers were on vacation or something, or what underlying mechanisms might be. I mean, it's. In multifamily, it's kind of a number that's been somewhat in the middle of where we have, although not anywhere near that first quarter 2019 of 918 units. For commercial, it's a remarkably this quarter, the first quarter of 2023 was very had very few building permits, and very little square footage, and it could be partly due to the interest rates. It's harder to get financing to build things. Also, you can see in the first quarter of 2019, it was pretty much the same. So this happens every so often, and vacancy for multifamily. And actually, it's basically flat. And this is not, I believe, inflation adjusted. So really what you could probably presume is that this really multifamily rents are actually down from quarter 1 2022 to 2023. Again, this is a coarse indicator. It's not broken out by type of building or any. So it would have to kind of dig a little bit farther to see the exact dynamics, but rents, as they do, they fluctuate up and down from quarter to quarter. We're down about 0.5%. Again, the overall trend is up, but every so often you're going to see these. It's not going to stay that way forever. Still we have while the home sales and active listings are up. Active listings are up a bit. Closed home sales are down a bit. Both of those historically are low. That's still reflecting our low inventory. That hasn't changed much, and same with our average sold price to listing ratio. It still remains a fairly strong seller's market. It's about a 5-year summary of commercial real estate. Again, it's very high level, but just wanted to look at some longer trends so we can see what's going on a little bit, rather than just looking quarter to quarter. So I'm going to just start with retail. So there's a lot of mixed conclusions to draw from this. And first, just starting with retail, actually, the retail market appears very strong and appears headed in a trend towards a position of strength in that we are really now, after hitting that pandemic low, we are really at about a 5-year high in rent in retail and about a 5-year low in vacancy. So there's definitely... we haven't added, part of this is that we actually haven't added a whole lot of inventory since 2017. That's about a 0.8% change in inventory, and a lot of that came just from in 2021 to 2022. We've got a fairly large decrease in vacant inventory, and even though there was a lot, for some reason there was a kind of a not much being delivered in 2021, but that seems to have bounced back in 2022. But it seems like there's still a bit of room for more commercial retail deliveries to happen.
There's just some trends in rent and vacancy for industrial space. Rents have been pretty stable generally, and the vacancy rate has continued to decline because there really hasn't been much new construction or new deliveries of industrial space in the county, and so what's there has been continued to be utilized. We just have some metrics to illustrate the demand and market here. The rents are relatively low, $15 a square foot compared to $30 for retail and $30 to $45 for office. So even as an investment sort of asset class, it's sort of lower order in this county, and that's generally what the metrics reflect.
Because the base is relatively low, the inventory is also pretty old. So one of the things that we're seeing that's a bit troubling is that we are losing some businesses to Frederick County because they're able to move up there, much more space, newer inventory. We just lost a small company the other day, but that trend has continued. We've tried to find industrial space when people are moving, and there's just not enough of it here.
So my comments on the presentation you just heard are the following. The economic outlook and assessment by the Montgomery County Economic Development Corporation is too optimistic and too naive. They're not taking into account the reality and the past data, and which shows the impediments to business and to business activity that the county faces. And now we'll see the reaction of the economic committee from the council that I was surprised to hear, because I expected more out of these council members, because they talked a lot of game last year, saying they would do this, they would do that, and to hear, for example, Natali saying that she's going to start discussing issues with the business owners. You already know the answer. Why are you doing this just now? You already know. And then Balcombe is also not doing what she said she was going to do. She already knew the issues last year, and during the campaign, in different events, we heard her talk about, yes, on day one, I'm going to start working on reducing the restrictions on business, ventures, and streamline the permits. And I know the issues, and I know this and that. But again, the reality is that the county council does not have any idea of an actual plan to address many issues. In this case, they have no idea how to address the economic development issues of the county. The county is going on a negative path in terms of economic growth. We're losing businesses to our neighboring counties. So now you'll listen to the Q&A from the county.
I will start by saying that I'm organizing a panel in September just to focus on office space. We really need to dig into this even more, and I'm asking property owners to be on the table, as well as brokers to be on the table. You can answer the question about what's your exit interview when a company leaves the county? Why are they leaving? Don't just tell me they want to find more space or go into an industrial location in somewhere else. But what's the package that they were offered look like? What are we not doing to ensure that businesses stay in the county and expand?
Because I'm not sure about the goals that we've set forth as a county for our economy. What we want, like, what does economic revitalization look like for Montgomery County
Not
post-pandemic?
commercial,
We know
but
what the
I just
economy
was
looks
curious.
like.
No agenda, just the question of, so for apartments, multi-unit apartments, is there a standard vacancy rate that's considered full vacancy? I mean, you want some vacant units. I mean, is that such a thing in the industry?
Yes, typically it's going to be less than single family, so more like 2.5% to 5% would be healthy, because you want to be able to have some units to be able to meet demand for people that are trying to move in.
So we're just about there, right? At full
Yeah.
full occupancy. Okay. Last one is, I think it would be just a good practice when the data is presented. I love data. I think we all love data, right? But the so what of the data, and I think tying that to the strategic plan. So, for instance, Mr. Tompkins, when you get the data from the perspective of what is your reaction to, okay, how does this impact the strategic plan? How does it impact? What is the reaction? What should we do anything about it?
Let me just say one of the things that I mentioned briefly, but as it ties to the strategic plan in general, is the thing to really watch is job growth, job availability, size of the workforce, more than anything else. Because if those numbers don't move forward, especially relative to the marketplace, then we're dead in the water. And so we do look at that very carefully, and we look at it compared to other jurisdictions. Because if their numbers are going in any different direction, or even if we're trending along with them, the economy can only grow at a certain pace. And more than anything, those are the numbers that we have to watch very carefully and very closely. I would also say that when we talk about overall economic strategy, which we've said before, is business retention is the most important thing, and then helping businesses here to grow. It's not as bleak as you may think in terms of us losing businesses to other jurisdictions. The examples I used are real, but it is in the industrial sector.
Connected to job growth, we're going to be bringing here different partners like the Black Collective, the Latin American Economic LEDC, Economic Development. There you
Development
go.
Council.
Because their work in partnership with the county, it's all about job growth and what are they doing that is impacting the county. We preserve that side of Leetonsville, which is right by the Purple Line metro stations, because it's one of the most active light industry areas in the county, and there was a story behind why we should preserve it. Lots of black and brown businesses and companies there that are thriving, right? We want to keep them. It's not the same case in every single part of the county, but I think that's part of the conversation that we're going to have in September when we talk about retail spaces.
Is regarding venture
because
capital.
the light industry zone.
When, or I guess more to the point, the venture capital that's coming in, do we know if it's domestic, if it's foreign? What's the nature of the investment in Montgomery County?
I don't know.
Can you please turn on
Well,
your-
as you were able to hear and listen and watch, the county council is not doing what is expected of them in terms of providing the legal framework for businesses and an investment to come into the county to create an environment where job creation and economic activity is pushed and sponsored. So one of the main things that I've been saying since last year is that one of the main impediments that captures everything that's going wrong in the county is that the local investment environment is not conducive to attracting new investments locally and from abroad. So we'll continue to watch, the performance of the economy, and also to keep in check what the county council is doing. Thank you for listening to and watching this second episode. Please share this far and wide. We are the resistance. Join us. Thank you.
And there arose a great storm of wind, and the waves beat into the ship, so that it was now full. And he was in the hinder part of the ship, asleep on a pillow. And they awake him, and say unto him, Master, carest thou not that we perish? And he arose, and rebuked the wind, and said unto the sea, Peace, be still. And the wind ceased, and there was a great calm. And he said unto them, Why are ye so fearful? How is it that ye have no faith? And they feared exceedingly, and said one to another, What manner of man is this?